Joining me, my next guest from Marcellus Investments, Saurabh Mukherjea, walking in right here to our video wall. Saurabh, be careful, lots of buyers there. Good morning.
Morning.
We usually don't ever meet on a Saturday, do we?
There is always a first time.
It is. I hope it's going to be worth it.
I think we'll have to wait and watch, but the fact that it's on a Saturday assures you of a bigger audience for your budget broadcast than ever before.
Is it going to be just that, or will there be more that will please the markets today?
I think
because the markets are also open.
Given that it's a Saturday, I think a middle class tax cut has to be there.
Yeah.
And the whole country is going to tune in. You've just cut corporate tax rates. If the FM doesn't cut middle class tax rates today, that'll be very, very surprising.
But you know, Saurabh, that's the thing. And I was chatting with Swaminathan Iyer as well, consulting editor at ET Now. And he said that, you know, and more market people actually believe that it's not really going to suffice if you just cut income tax rates in that one small bracket.
Sure.
Because the larger collection is from the highest bracket. You cut the rates, that's going to increase what? Just people buying more expensive soaps and shampoos.
Absolutely.
What's going to make a material lift to consumption is if you cut, salaries across the board.
I think,
or rather taxes across the board.
I think what we have to be very careful about is understanding the extent to which the budget has become an affair for optics, for public perception. I think your previous guest, Mr. Narayan, was pointing out how over the years the impact of the budget on the market has reduced. So I think that trend, I reckon, continues today as well. The second thing, we also have to be fair to the FM. She's already announced so many things in the last 4 or 5 months that it's not clear how much space there is, how much fiscal space there is after the multitude of announcements we've seen since August. So I think today is more about optics, about generating a positive narrative, about making the middle class feel good about what's happening in our country. I agree with Swami Iyer, how much tangible boost GDP can get from reducing the standard or increasing the standard deduction from 2.5 lakh to 5 lakh. I think is questionable. If the government wants to have a tangible impact on the industry, I think the place to focus on will be housing and NBFCs. On NBFCs, we need a credit guarantee scheme. The NBFC sector is desperately starved of funds. And in housing, we need the government to step in and increase the stimulus for affordable housing, and perhaps say that the interest subvention, the interest tax reduction for affordable housing should go up from 20 lakhs to 40 lakhs. Housing and NBFCs, I can see the only multipliers the government could lever to generate some sort of positive economic impulse. But I suspect more than that, the focus will be on optics and feel good for the middle class.
Right. So there's lots at stake right now. The economy is grappling. The GDP figures are at an all-time low. You've got the IMF coming out with their report and saying that India has to be responsible for the global growth forecast downgraded as well. What is the need of the hour? We all know that the fiscal elbow room is limited, but if the fisc is challenged for instilling growth back into the economy, is that something that the markets are going to be okay with?
I think the markets are broadly factored in somewhere around the 3.7, 3.8 fiscal deficit for the current year, and also I think the market also know for next year the fiscal deficit will be pretty similar. So some degree of fiscal slippage is already expected. What we are looking to see as market participants is, are there any creative ideas that the government has where they use their modest fiscal firepower, combine it with the free markets, with the financial system's firepower, and do some rescue work in the financial services ecosystem, especially the NBFC ecosystem. So, for instance,
what could be those out-of-box ideas?
The one that I would be very keen to see, I've written about it, is a credit guarantee scheme for the NBFCs. So the government doesn't necessarily have to say we will go forth and recapitalize the NBFCs. What the government needs to say is we will put up a certain amount of money, either directly or via SBI or via SIDBI. We will put up a certain amount of money that will act as, say, 50% credit guarantee for anybody who purchases NBFC CPs or CDs, right? So that way you're putting up for every dollar of money flowing into the NBFCs, you're putting up half of it. You're asking the financial system, the bond market, to put up half of it. Those sorts of ideas, so for example, a bad bank or a bad AIF, in inverted commas, which is partly funded by sovereign wealth fund money, partly by the government of India. So government has skin in the game. The bad AIF then goes into the market and buys out the stressed CP and stressed NCD paper from the NBFCs.
So that you're saying is going to finally instill liquidity into the system, which was completely
That's right. So using the government's credibility, using some government money, you put skin in the game, then you invite foreign money or you invite local bond market money to recapitalize our NBFC ecosystem, because without that, it is going to be very, very hard to invigorate SMEs, to invigorate housing, and without that, job creation ain't going to happen.
How critical is disinvestment, Saurabh? We all know it's been pushed back, the BPCL disinvestment, to the next fiscal. But do you think an out-and-out sale, a complete roadmap and a clear roadmap, all or none? Give me BPCL with the subsidiaries, give me VSNL with the land bank. Is that the clarity that the markets will be seeking today?
I think what is a given, I think, is that we will get the highest ever disinvestment target for next year.
I hope the math adds up.
Now, I think they'll announce a big number. I suspect 110, 120,000 crore. If they announce a big number, they also have to announce some big names. I think BPCL, Air India, Shipping Corporation, etc. is a given. Maybe they'll throw in one more big name, such as here Coal India or a ONGC disinvestment. The challenge with all of this, Aisha, as you know, is the appetite for these things isn't the greatest out there. The juiciest asset in this is BPCL, and therefore if the government can commit to some sort of timeline for a BPCL sell-down process, that will give us some conviction in the 110, 120,000, the big number that I'm sure we're going to get. We are fiscally pushed, you will come up with a big number on disinvestment. I hope they give us some timeline on BPCL, because that's the most likely asset that will find a buyer.
Okay, Saurabh Mukherjea, we look forward to this Saturday. Glad to have you on the show. We'll let you go on that.